Coming up on Market to Market, more rain drags down planting progress. Counterpunches in trade talks prompt calls for action. Passing the torch to keep rural America in business. Market analysis with Darren Newsom. Next.
To put in their seasonal high. This is when
Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. This is the Friday, May 17 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. The phrase, "it's the economy, stupid," entered our lexicon during the 1992 campaign for the White House. If a president's success is tied to the economy, the current administration got mixed returns this week. Consumers cut back their spending in April by 0.2%, continuing a seesaw pattern for 2019. The building of more single-family homes led to an increase in housing starts. The Commerce Department said last month the rate rose 5.7%. The monthly survey of bank CEOs in rural areas slumped below growth neutral for the first time since November. Creighton's Rural Main Street Index registered a 48.5. Manufacturing giant Deere & Company cut profit and sales expectations for the year, citing the trade war and weather-delayed planting as reasons. Usually the saying is, if you don't like the weather, wait 15 minutes and it will change. Except this year, it hasn't. The National Oceanic and Atmospheric Administration says the continental United States just booked its wettest 12-month period in recorded history. And more rain is coming. John Torpy has the story.
Heavy rain early this week inundated southern states of Louisiana and Mississippi, flooding streets and neighborhoods. Evacuations were common around New Orleans as portions of the Delta received record rainfall. The National Prediction Center measured rainfall totals in New Orleans and Baton Rouge over 9 inches in a 5-day period. It's not known if heavy rains were to blame, but to show the power of water, this spillway gate broke free on Lake Dunlap near San Antonio, Texas. More rain in the plains hindered an already slow spring fieldwork season. USDA's latest planting progress report revealed a historically slow pace. Only 30% of the nation's corn crop is in the ground. The 5-year average for this time period is 66% complete. A window opened for a few farmers to allow some planting by late week, but the weather forecast calls for Mother Nature to soak already oversaturated farms in much of the Midwest. Projections from the National Oceanic and Atmospheric Administration predict the upper Midwest and parts of the High Plains could receive as much as 5 inches of rain over the next 7 days. For Market to Market, I'm John Torpy.
Bloomberg reported Friday morning the U.S. will lift steel and aluminum tariffs on Canada and Mexico. This could clear the way for Congress to ratify the USMCA. In other trade news, USDA hinted another farm bailout package may be coming to rural America to counter losses from the trade war. As the number of tariffed items grows, so too does the frustrations and fortitude of involved parties. Colleen Bradford-Krantz reports.
China announced Monday a $60 billion counterpunch to the Trump administration's call last week to apply 25% tariffs to a wider array of Chinese goods.
Well, one thing I think we all agree on is that nobody wins a trade war, and we're all hoping that these particular tactics get us into a better position vis-a-vis China, which has been our worst and most unfair trading relationship for a very long time.
Hardliners on both sides of the ocean appear to be digging in for a battle that's already disrupting trade between the two economic superpowers.
We have repeatedly stated that raising tariffs will not solve any problems. And igniting a trade war will only harm both others and itself.
The U.S. claims the Chinese steal technology, forced foreign companies to hand over trade secrets, and unfairly subsidize their own companies.
We gotta do something about China, or America will not be a strong economic power 10 or 15 years from now. I don't fully agree with what the president has done because he's fought this against too many different countries. We ought to all be united and aimed at China.
I think it's bad for agriculture, these tariffs now. But on the other hand, look we've had 3 presidents, both Republican and Democrat, for 15 or 20 years, letting China get away with stealing their way into prosperity.
Some producers, such as Brett Davis of Delaware, Ohio, renewed the trade not aid sentiment in hopes of avoiding long-term loss of export markets.
Once you lose that customer, what does that do down the road? Can you gain that market back? That's very scary for us as the American farmer.
For Market to Market, I'm Colleen Bradford Krantz.
Whether it is a Fortune 500 company or an office employing 5 people, succession planning to the next operator is key to the business surviving the transition. A program in the Heartland is aimed at matching owners seeking an end and those looking for an opportunity to hang out their shingle. Peter Tubbs reports in our cover story.
50-pound bags of pig feed are filled at Valley Feed and Supply in Bonner Springs, Kansas. The business had been owned by the Stubbs family for 90 years, but was sold in 2018. New owner Matt Leipel wanted to apply his farming and engineering experience in an agricultural business, but wanted to avoid the risks of starting a business from scratch.
The good thing about that is, if it's a successful business, you're not reinventing the wheel. It's already there. You just have to continue to keep that wheel turning.
The transaction was assisted by Red Tire, a project managed by the business school at the University of Kansas.
Red Tire is the link between retiring business owners, or those who want to exit their business, and those who are qualified and capable of taking over the business, with the benefit to the community of retaining the essential services of the community, which is key to retaining quality of life in that community.
The loss of businesses like medical practices, ag-related businesses, and light manufacturing can be debilitating to the viability of rural towns. Red Tire facilitates the purchase of companies by a new owner, often an experienced professional looking to be their own boss and control their economic future. One challenge for businesses looking to sell is arriving at a fair valuation of their business.
So we can build out a range of value for our valuations. Because we're working with both buyer and seller, we don't like to produce a valuation that is called a conclusion of value or a price point valuation. Instead, we give a range of value to help with negotiation between buyer and seller, basically.
The negotiation also includes a transition period where the seller works with the buyer for a designated period of time to transfer the knowledge of how the business works. This transition period dramatically improves the odds of success for the new owner.
Businesses fail during a transition most commonly because customers get forgotten or the process gets manipulated in a way that is not appropriate for the business. And so it's the handoff period between the seller exiting the business and the buyer taking over the business where businesses tend to fail.
Red Tire has completed 60 transfers since its start in 2012. All 60 are still in operation. Dr. Deidre Trushinger bought a dental practice in Auburn, Kansas in 2017. The retiring dentist spent more than a year on staff introducing her to patients and teaching how the practice operated. Now on her own, Dr. Trushinger has seen her patient list increase enough to require the remodeling of a century-old bank building as a new, larger office. But the financial side of her business was the intimidating part of the purchase.
I did not do a whole lot of research, and I think that's a testament to how awesome Red Tire is, because they did so much research for me and provided so much data. I didn't feel the need to go outside and get 5 different appraisals on what this practice was worth. They were working both sides very honestly and just trying to make a good, realistic picture of what the value of the practice was.
For many of our participating companies, 175 of them, they need to get themselves to the psychological and emotional point that they're able to walk away from the business. And something that they have devoted 20 or 25 or 30 years of their life to, now all of a sudden they're going to turn over the relationships with their customers and, of course, the machinations of running their own business to somebody else. So having that emotional security to be able to do that, being at the right time of life to be able to make that transition, that's really important.
For Neil Stubbs, finding a buyer with the financial ability to buy the feed mill was only half of the equation, and understanding of the work was an even bigger hurdle.
He definitely has an interest in agriculture. He seemed to understand the type of work we do here better than a lot of people do, and being a farmer himself, he's familiar with heavy equipment, which is kind of what our mill out here is.
The business at Valley Feed and Supply has evolved over the last 20 years. Situated in the corridor between Kansas City and Topeka, the demand for hog and cattle feed has declined as sales of horse and chicken feed has risen. It is also the type of business that is well suited for the Red Tire program, a sole proprietorship with good cash flow and a track record of turning a profit. Red Tire estimates there are 10,000 businesses of this size in Kansas and Missouri alone whose owners are nearing retirement and lack a succession plan. Much of the work of finding the valuation range of the businesses looking for new owners is done by students in the business program at KU. Their salaries are paid by a grant from the U.S. Economic Development Administration and allows Red Tire to be a free service to both buyer and seller. Red Tire also provides a level of transparency for the buyer that is uncommon in a typical broker-driven transaction. That transparency helps smooth the sale from one owner to the next, keeping a rural business going that otherwise would have closed.
It was in our family for 95 years, so it was not the time I wanted to drop the ball. We did everything we could, to make sure everything went smoothly, and I think it did.
From Market to Market, I'm Peter Tubbs.
Next, the Market to Market report.
Traders apparently noticed that 4 major corn-producing states report single digits of corn planting progress. For the week, July wheat gained 40 cents, while the nearby corn contract jumped 32 cents. The soy complex went along for the ride much of the week before another sell-off Friday, as the prospect of more acres became a stronger possibility. The July soybean contract improved 13 cents. July meal increased $7 per ton. July cotton fell $2.46 per hundredweight. Over in the dairy parlor, June Class 3 milk futures went up 15 cents. The livestock market was mixed. June cattle lost $1.17. August feeders shed $1.33, and the June lean hog contract put on $2.70. In the currency markets, the U.S. dollar index improved 67 ticks. July crude oil expanded $1.19 per barrel. COMEX gold fell $11.20 per ounce, and the Goldman Sachs Commodity Index gained 8 points to finish at 442.60. Joining us now to offer insight on these and other trends is one of our regular market analysts, Darren Newsom. Darren, long time no see.
Yeah, very regular anymore.
Yes, very regular.
Thanks for having me back,
Yes,
Delaney.
thank you. Darren, we're going to start off the show doing something a little different.
Okay.
Because you decided to tweet in your own question this week. And folks, you can share your questions each week for our analysts. This week, we're going to take your question, Darren.
Okay.
So your question was, what is the technical picture for the markets after this week? And I think that's on the minds of a lot of folks.
Yeah, and it's going to be fascinating. When I sit down to do all of the charts that I look at, and I like to look at, basically I like to look at weeklies and then add in dailies, and then, I mean, draw in on monthlies if I want to look at the long term. And almost, if I'm talking about the grain and oilseed complex, just about every one of them is bullish. I mean, we're seeing, a couple weeks ago we sat here and we talked about how we could see a 2-week reversal, 2-week bullish reversal in soybeans. It didn't happen, but it did set up in 2 weeks' time, not a 2-week reversal, but a bullish key reversal where we went to a new low early this week, we shot back up, blew out last week's high, closed higher for the week, as you pointed out. So from a technical point of view, not just soybeans, but corn, wheat, and almost everywhere you look, any market you look at in the grain and oilseed complex looks bullish going into the weekend.
So is Darren Newsom bullish?
If with my split personality, if I'm looking at it strictly from a technical point of view, it's hard for me to say I'm bullish, but yeah, I'm going to have to say that the charts look bullish right now.
We're going to have to write this one down in history.
That's right.
Darren, when you look at the wheat markets, they also, you mentioned, have a pretty bullish technical indication right now. Did they have a reversal earlier this week because corn and soybeans were pulling it up, or weather, or was there something else going on there?
Yeah, I think we're at the time of year where wheat is going to act on its own. And what's fascinating is that we just can't get the hard red winter harvest started right now. So it is weather related. It's just like everything else. Weather is the key at this point. I know we kind of got into a little bit of a debate about what does a weather market mean. But we are in weather markets right now. And I guess the point that I was making earlier this week is that they usually don't last all that long. But this one, starting in April, May, it's a different beast than what we're usually looking at when it's, a 7 to 10 day time frame in the summer when it gets hot and dry. This is something completely different. So, yeah, we're in a weather market right now. Basically, every grain and oilseed market is being driven by the latest weather forecasts, and it certainly seemed like as we headed into this weekend, certainly seemed to still be in charge.
Absolutely. I mean, especially when you look at the corn and corn market in particular. Let's talk about that because we've neared insurance states. We're nearing insurance states in a lot of states. We're still drastically behind on planting. Darren, at what point do you think folks should just say, maybe this year is a prevent plant year for me?
You and I have been going to a lot of meetings, and the ones that I've been going to where they talk about strategy for this marketing year, for the 2019-20 marketing year, one of the favored strategies is prevent plant. So just take the prevent plant and do something else with it. Don't even worry about it. Don't even worry about trying to spend the money to get that crop in. So that seems to be the goal this year, rather than fighting Mother Nature, trying to get these acres planted after the insurance date. All
right. Well, let's say producers go ahead. They say, I'm going to take prevent plant. How do they ensure that if we continue this rally, this weather rally, they're able to take advantage of some of those?
Yeah, I don't know. If they wanted to play the markets a little bit, most of them are probably still long last year's market. They still probably have some of last year's crop lying around, so they could certainly use that. Some of them might jump into the futures. They could jump into the options on the idea, particularly if we're looking at the new crop market, that this thing's not going to slow down. As long as the weather stays the way it is, and I believe the story you talked about over these next, 6 to 10 days is not going to be pretty for much of the Midwest. There's a number of different ways that they could play it. They could play it, as I said, cash, futures, options, whichever seems to fit them the best at this point.
If you are a producer sitting on old crop corn right now, are you making cash sales?
Well, yeah, because this has nothing to do with old crop.
Right.
Old crop shouldn't be going up. We saw the last Thursday, the latest marketing year export shipment numbers were released, and we're on pace right now. If we continue what we've seen over the last 4 weeks, spread out over the last 16 reporting weeks, we could come up 200-300 bushels short of USDA's projection at this point of that 2.3 billion bushels. So that could add 3 billion or so onto their whatever it was 2.0 something in its May round of estimates. So again, we're talking about 2.3, 2.4 billion bushels possibly of ending stocks. We've got a lot of corn on hand. Basis showed a little bit of a crack this week. National average basis weakened a little bit. So I think there is some signals that if I'm holding cash, this rally in the new crop doesn't have anything to do with the old crop market. We've got plenty of old crop on hand. We might be wanting to get to that point where we're feeding the old crop market a bit.
Okay, and then I think the other question that gets lumped into the whole weather debate is, will those acres, if they don't go to prevent plant, are they going to turn to soybean acres?
They could possibly do that. But I'm also hearing it's going to get too late. With as wet as it's going to be, it could get too late to even get soybeans in. I was talking with we both met him this weekend, a farmer from Mississippi, who's saying the time window for the optimum soybean production has also passed, at least in his area. So I think we're going to be running up against more of that in the Midwest as well, where I'm not going to sit here and say they're not going to plant anything, but I think it's going to be very difficult, and they're going to certainly have to look at some different options.
With that being said, Darren, you mentioned corn and wheat are bullish. Are you still bullish soybeans as well? If we don't get some acres planted, we still have a large carryout number.
But see, you're trying to take fundamentals into account. If we take fundamentals into account, there's no way I'm bullish soybeans. I'm not bullish old crop corn. I'm not bullish wheat. If we look at fundamentals, which so many people like to do because fundamentals drive the market and all this. No, I'm not bullish at all for any of the markets if we're dealing with fundamentals. It's just from the technical side, and this is one of the more interesting divergences I've seen over the last 30 years, where we've got very distinct directions going between technical and fundamental analysis, and I think it's going to be great watching to see how it plays out.
I think so too. Darren, I'm going to save the cotton discussion for Market Plus, so folks do tune into that. We've got to talk about the livestock markets as well. Funds are still net long in the live cattle markets. Do the funds know something that we don't know?
Usually. Basically, it's just usually their algorithms, but yet when you gave a kind of a rundown of what the markets did this week, again, we'll go back to what we talked about a couple weeks ago. We were still looking for some pressure in the cattle, in the live and feeder cattle, and that's what we've seen. I think it's going to run out of gas here before too long. We've seen the hogs move up. I think we're getting ready to move live cattle and feeder cattle start to move higher as well. This is kind of that end of the last little bit of the sell-off, the downtrend that we were looking for. It's pulled the market pretty low. I think the June live, we're testing something like 109 or something. They may have moved below that the last couple days, but that's decent support. Now we'll see if we can't start finding some commercial buying to go along with the non-commercials who are already holding along. And
is it that an indication in the feeder markets? You look at Friday's closes, August feeders put on $2+. Is that a sign to you that we're starting to turn this thing back around? Sometimes it's just a Friday activity. If it's been down all week, you see some covering coming in on Friday. But $2 is a pretty big premium to the old crop or the old contracts here. $2 is a nice move. I'm not going to downplay that. I want to go back and look to see, okay, so how did the August move in relation to the October and so on and so forth as we look at the spreads? Yes, it was a good move, but if we see the right type of activity that was indicating commercial traders are also coming into these markets, that's going to give us even more support going into next week. Okay, we've got to talk lean hog markets. They had a pretty strong week again. What's leading those markets? We know weather is leading grains. We had... again, we'll go back a couple weeks, we talked about the initial run-up with the, make sure I get the letters in the right order, ASF, with all that hubbub. So we ran the market up, we pulled it back, now we're moving back up. I don't know that we take out the previous high. I think we've just still got some trade going on in here. I'm not sure that the cash market's providing all that much support. If it's not, then I think that gives us the opportunity for the hogs to run out of momentum, upside momentum here before too long. If we blow out that top, which is what? Above where we are right now. I don't remember. We'll give you some slack. We've been on a plane. Yeah, I never remember the numbers anyway. But if we blow that out, then that changes the picture. That would indicate that we not only do we have some fund buying coming in, but we've also got we've got the commercial side coming in as well, which is very important, particularly as we head off into these summer months and so on, from a seasonal point of view. So if we can do that, I think it changes the picture considerably in the hog market. So you mentioned the commercial side needs to come in maybe to see some action. Where are the funds in the commercial side sitting right now? I haven't looked at this week's CFTC. If I recall, and I could, I'm not even. It's a little fuzzy. It's a little fuzzy. I was thinking that they were still long the hog market. Again, it depends on what report you're looking at. Fairly certain they're still long, but I probably just said something really stupid, so I have to go and check the numbers. We can double check it and verify it on Market Plus. That's right. Okay, since we've got just your 10-second thoughts here, Darren. Cotton is also potentially having a weather market. Are we going to see some acreage switch out of that as well?
I don't know. You look at the way the market acted this past week, and it just can't find any friends right now. Longer term, could we see some acreage switch? Certainly, we could. But right now, it's just really struggling.
All right. Darren Newsome, thank you so much.
All right. Thank you, Delaney.
That wraps up the broadcast portion of Market to Market, but we will keep this conversation going on Market Plus, where we'll answer more of your questions. You can find it on our website at markettomarket.org. Tractor riding season is here, and we have just the thing to keep you company. 3 weekly podcasts to stay on top of what's happening in agriculture. Download where you get your podcasts. Join us again next week when we'll see how a pivotal moment in agriculture is still drawing attention to the nation's attic. So until then, thanks for watching. I'm Delaney Howell. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.